Welcome to the Riskwiser Zone. I'm your host, Lewis. We have two major stories to discuss today. First, let's take a look at what's happening in Taiwan, where concerns over liquidity are driving market rates higher. The yield on Taiwan's 5-year government bond has risen significantly, and some analysts are predicting that this trend may continue as the central bank adjusts its monetary policy to align with the country's tech-driven economic growth. On the other hand, gold prices have been holding steady after U.S. President Donald Trump announced that the Strait of Hormuz could reopen as early as this week. This news has eased concerns over an energy and inflation shock that had previously roiled global markets. As a result, bullion is currently trading near $4,315 an ounce, having climbed 2.2% in the previous session. It's essential to consider both perspectives when analyzing these developments. While some investors may be optimistic about the potential reopening of the Strait of Hormuz and its impact on gold prices, others may be more cautious due to the ongoing geopolitical tensions in the region. As we continue to monitor these situations, it's crucial to remember that market trends can shift rapidly in response to new information and changing circumstances. We'll be keeping a close eye on these stories and providing you with updates as more information becomes available. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of high-stakes finance and technology, where the lines between innovation and risk are constantly blurred. Today, we're focusing on the recent IPO frenzy that's taken the market by storm. SpaceX, the brainchild of Elon Musk, has just completed the largest initial public offering in history, raising a staggering $85.7 billion. This massive influx of capital is set to propel the company's ambitious plans for space exploration and artificial intelligence development. But what does this mean for investors and the broader market? As we've seen with other high-profile IPOs, the excitement can be short-lived if the company fails to deliver on its promises. SpaceX's valuation has already surpassed $2 trillion, making it one of the most valuable companies in the world. However, some analysts are raising concerns about the company's debt and the potential risks associated with its aggressive expansion plans. Meanwhile, other companies are also lining up to go public, hoping to capitalize on the current market euphoria. Taxi-hailing app Go Inc. has just raised $553 million in Japan's largest IPO this year, while OpenAI's CFO Sarah Friar is preparing for the company's highly anticipated public debut. As these companies navigate the complex and often unpredictable world of public markets, they'll need to balance their growth ambitions with the scrutiny and expectations that come with being a publicly traded company. It's a delicate tightrope to walk, but one that can offer tremendous rewards for those who get it right. As we continue to monitor the developments in this space, one thing is clear: the intersection of technology, finance, and risk is more complex than ever. With great innovation comes great responsibility, and it's up to investors, regulators, and companies themselves to ensure that the risks are managed and the rewards are shared by all. Welcome back to the Riskwiser Zone. Today, we're going to dive into a complex and intriguing story that has significant implications for global markets and economies. As you may know, tensions between the US and Iran have been escalating, with a particular focus on the Strait of Hormuz, a critical waterway that accounts for nearly 20% of global oil trade. Recent developments suggest that a tentative agreement has been reached between the two nations, paving the way for the full reopening of the strait. While this news has been met with cautious optimism, many experts warn that the road to normalization will be long and arduous. In fact, some analysts predict that it may take several months for oil supply to return to pre-war levels. The closure of the Strait of Hormuz has had far-reaching consequences, including a significant drawdown of commercial and strategic inventories, as well as a surge in oil prices. The U.S.'s emergency supply of crude has hit its lowest level since 1983, underscoring the gravity of the situation. As we consider the potential implications of this agreement, it's essential to acknowledge the complexities and uncertainties involved. Shipping executives, traders, and energy officials are all waiting for more clarity on the details of the deal, including issues related to shipping safety, operating rules, and whether the strait will indeed remain toll-free. While some analysts have cut their price forecasts for the coming quarters, others remain cautious, warning that key risks persist. The situation is fluid, and investors would be wise to exercise caution when navigating these uncharted waters. As we conclude today's episode of the Riskwiser Zone, it's clear that the situation in the Strait of Hormuz will continue to unfold in complex and unpredictable ways. As always, our goal is to provide you with balanced and informative insights to help you make more informed investment decisions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.